and maybe you just find another investor to take it over, right?
Right, well, and that's exactly it. When it becomes a problem is if the property has gone down in value. Now that has even happened in the last several years. We've watched as some communities have fallen even since 2009, when many of us thought that was the bottom of the market. We've experienced this double dip, and in fact the second dip has gone below the first dip in many markets.
But if the property's gone down in value, your investor definitely wouldn't want to foreclose, right?
Well, that's exactly right.
As long as the borrower's making the payments.
As long as the borrower's making the payments. And right now, the best play in real estate, in my opinion, in the Bay Area is rental property, is acquiring property for rental income for a long-term hold. You certainly don't want to be buying property for appreciation today, and fixing and flipping, while it's very popular, and a lot of my borrower clients are in fact buying, fixing and flipping in the Bay Area, it is much more difficult than it was 5 years ago.
Absolutely. Well, Brian, our other co-host, he's been buying rental property.
Yeah.
At Fort William.
Well, it's not for the faint of heart, and I've had clients borrow money from me to do a fix and flip and make no money because they didn't do their homework well enough. So it is something that you have to be careful of.
But your lenders didn't get hurt.
No. Our lenders don't get hurt because, again, that's the reason why we don't go higher than 65% of the purchase price. I don't care how good a deal a borrower tells me they're getting. So I'm buying this at wholesale. You make me a higher loan.
Everyone's buying wholesale.
If I'm getting the property for 65 cents on the dollar, does that mean at 65% you'll fund 100% of the purchase price? I get that question almost every day, and the answer is no, of course not, because you're not getting a property for 65 cents on the dollar. You're getting a good deal, but that's the retail price today.
Well, the other part is you want your borrower to have skin in the game. You don't want him to just throw his hands up and go, this didn't work, see you later.
Right, you don't want him to get halfway through the project, realize he's got cost overruns or problems, and walk away, leaving the lender holding the bag. Unfortunately, we have not had any of those situations happen.
Okay.
And do you also, if I wanted to invest in a loan, is that someone would come to you for that, or just if someone needed a loan?
Both. I have two types of clients. At Pacific Private Money, we have our investor clients, and thank you for asking, Michelle, who...
By the way, I didn't put her up to that. She just came up with that on her own.
No, brilliant
Well,
question.
when you think about what do you get in the bank? That's the problem.
Well, you're getting
Exactly.
0.5% if you're lucky,
Right.
so I have approximately 100 active investors for whom are on our distribution list, and as we get loan requests and we underwrite the loan and we decide this is a good opportunity, I would put my money in it. So that's kind of the gauge we use if we feel safe and if we feel comfortable with the parameters of the loan as we underwrite it. We then distribute in an executive summary form that investment opportunity to those who are on our distribution list. So we're located in Marin County, and a lot of our clients live in Sonoma County, Marin, and San Francisco. Actually, they are all over the Bay Area who have called or emailed us and said, hey, please put me on your distribution list for trust deed secured note investments. And
but you're not limited to those 100 clients.
No.
Sometimes there might be people who say, I only want something in San Francisco, or I don't want anything in San Francisco.
Well, 100 sounds like a lot, but they're liquid at different times, and they're looking for different types of clients. So there's, I welcome anyone for more information to go to our website at pacificprivatemoney.com and read about trust deed investments, because you can make easily, it's just so easy to make 8, 9, 10% fixed interest on your savings. Interest is paid monthly. The notes are short term. It's six months, 12 months, 24 months. You choose how comfortable you are going out. I've got some investors that say, hey, you got any 5-year notes out there? I want to lock my money up at 10% for 5 years.
Well, the thing I like about it is that if you invest in it, you know exactly what you're getting. When people say, well, I don't know what the risks are, well, it's not rocket science. Here's the risk, that the properties go way, way, way down in value, even more, and you can't get your money out when you sell the property if you have to foreclose.
Well, right. Property values would have to go down another 25% for the types of loans that we do to really be in any kind of jeopardy, in my opinion. And I don't know anyone who's predicting in this market that that's a likelihood. I think that's
Not from this
very
point.
unlikely. I think
Yeah.
I think most of the air has been let out of the tire. I think we're near the bottom, if not at the bottom, and but
Yeah, even if you don't expect a huge
Right.
appreciation, you don't necessarily have that much extra risk.
But even still, we're not doing 80% loans. 65% is the max, and a lot of loans we do are quite a bit less. I mean, I'm looking at a loan right now in San Francisco that's 50% loan to value. I mean, that is not a difficult decision to make in terms of security.
All right.
We've always gone out and actually looked at the property if ever we were gonna invest.
Most
in
of
a-
our most of our lender
So-
clients do,
Right,
absolutely.
you'd say,
Bricks.
okay, would I
Don't
wanna
kick the
own
tires.
this?
Yes.
Right, would I wanna
That's the
own
major
this?
thing. Okay,
Yeah.
we're gonna cut to our third and final trivia question at the commercial break here. Again, the theme is the old TV show MASH. Before BJ Honeycutt joined the show, who was Hawkeye's sidekick who shared his tent? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. I don't see either one of you shaking your heads yes on this one. This is a little bit harder.
I know that one.
You do know that one. All right, okay. Michelle, you guess you don't watch too much TV. Okay. Call 888-912-1190. That's 888-912-1190 to answer this question. Before BJ Honeycutt joined the show, who was Hawkeye's sidekick who shared his tent? Again, call 888-912-1190. Make sure to include your name, address, email address, say this all slowly when you call, and your phone number, and we'll be right back. Excellent.
It was like almost 11 minutes, I guess.
Yeah. So I gotta
I'm
grab
not using the same
Apple.
watch you are, I'm just kind of.
Yeah, that's okay. I got it. Okay. What do you want to cover in the last part? Just a little news of the day.
Yeah, I've got a couple of articles here that are
Okay.
kind of noteworthy. It's just basically the monthly statistics that come out on sales. You get talk about the pending home sales for October and the direction they're going, and then just kind of comments about what these numbers are meaning and what they mean for next year.
Okay.
Do a lot of the listeners have real estate? Is that a big, would you say,
Uh,
part of it? Because
hard
the
to
reason I
say.
mentioned is that I'm the certified specialist in the firm in estate planning, but we're known as the real estate investor's lawyer. And
Well, I thought I would bring that up in the
Yeah.
next segment.
Oh, okay.
realestateinvestorlaw.com.
Your husband is the
Right.
famous Jeff Lerman.
Yeah, it's realestateinvestorlaw.com is our website. It'll get you the same place as lermanlaw.com.
Ooh, that's right. Well, that's fine.
Actually, what we can do, and I told Robert this, is that if we go over, we'll just take out, since we're not doing Dominican University, we'll just take your commercial out.
Ah, okay.
Yeah, but I'll still kind of give us the time here. All right. You guys ready?
Mm-hmm.
Kramer, how you doing?
Okay, you got 20,
Oh, we don't need
20-something minutes on
No,
my
no,
tape.
we don't need that much. Okay. Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Haunt, the famous private money lender from Pacific Private Money, and Michelle Lerman of Lerman Law Partners. And when we cut to the third and final commercial break, we asked this trivia question. Again, the theme is the old TV show MASH. Before BJ Honeycutt joined the show, who was Hawkeye's sidekick who shared his tent? Now, Mark, you said you know this answer.
That would be Trapper John.
Trapper John McIntyre. Very good. Okay, Mark, let's talk about today. What is going on in real estate today?
Well, it's the end of the year, and we've been on for a year and a half, and just about every show, Edward, we talk about real estate and the direction the market's heading. And so, of course, as I'm doing some show prep, I'm looking at the blog posts and reports. And this week we had the release of the October pending home sales index. And what that is, pending home sales are basically new contracts, what properties got into new contracts, and that's actually a forward-looking statistic, so that's important. In fact, in my opinion, it's more important than how many units were sold last month. Now, if you listen to last week's show, we talked about how the sales for September were down year over year, not by a lot, but down, not up, and how this fourth quarter, at least in the eyes of a lot of real estate agents, have been pretty disappointing. Unit sales have not gone where a lot of people thought they were going to go. So here the October pending home sales index comes out, and it says, well, pending home sales are up, and that's good news. But I also know that there's something happening in the market, and this was another report that I read from, this actually comes from CNBC, and it's the fact that realtors are reporting higher cancellations, and that this cancellation rate right now in home sales contracts is 20%, and that's that's an all-time high. And
What are they saying? What is attributing it?
well, they're at first guess you might say, well, it's maybe because people aren't getting the financing, but as it turns out, that only accounts for about 10% of the cancellations apparently. And the bigger issues are things like failed inspections, and the biggest one really is buyers with cold feet and economic conditions.
Wondering, is it gonna go down lower?
Right,
Yeah.
and
By buying at the bottom.
and appraisal's not coming through. So we have this frustrating condition, and it's particularly frustrating if you're buying, fixing, and flipping out there. I know that there is a lot of flippers out there that are sitting on inventory that's on the market, and they're wondering where the buyers are. So the prediction, so here we are. It's December. Not a lot of people are expecting a whole lot more to happen during the holidays. So we're all kind of looking forward to next year. Okay, what's going to happen in 2012? And usually the selling season generally accepted starts around after the Super Bowl. That's kind of like when the housing market picks up. And so we're saying, okay, well, spring and late winter, where are we going? And that's where everybody's crystal ball tends to differ a little bit. It's some people seem to think, well, we should stabilize and maybe even see a little improvement in the second half of 12, while others are going, maybe we're going to see a little bit more softening of prices. And I don't claim to have a clearer crystal ball than anyone else, but I do tend
Why do I have you as my co-host then?
But I do tend to, well, I just want to make that caveat, I'm not a guru, but I do tend to believe that I think we're at or near the bottom, and I do think the buyers will come out. I think there is some pent-up demand going on right here. I think the banks are going to start releasing more foreclosure inventory, which actually I think is going to be snapped up by investors who have been waiting for more inventory to come on the market. There's a lot of educational seminars going on out there telling people that there's never been a better time to buy rental property.
Well, interest rates are still pretty low, and the rental market is still pretty strong. But a question for you about the part about the inspections, because you said some of it has to do with inspections not passing, but that you could just adjust the price. I mean, it's not going to be a real surprise, let's say, to a seller, because any buyer who does an inspection is going to figure out if it's got termite damage or whatever, and it is what it is. I mean, the seller can't just say, well, just ignore that and keep the price high.
Well, you're talking about what they refer to as equity sales, not distressed sales. Those are the sales by either someone who's fully repaired a property and is looking for market value, or somebody who is living in their home and needs to move, and it's not a distressed sale. They just want to sell it for a fair market price. And it's very, very frustrating. They're competing with distressed sales, and since distressed sales make up nearly half of the sales each month in this current market, you're dealing with a mentality where people just, well, if you're asking $250, then I'm going to offer $225,
Sure.
and so when an inspection comes in and there's the inspector's paid to find something, and they usually do. So it's just I think it's a number of factors, but until we get out of this mindset that housing is continuing to drop, and I do believe it's a mindset. It's like the stock market. I think people's expectations make things so. I don't think it has
Sure.
anything to do, because it's not like we've seen a tsunami wave of new foreclosures on the market, and so
Not
it's-
yet.
Well,
You said the bank
yeah.
maybe, but
Um,
one quick thing I wanted to bring up with
Yeah.
real estate here was something I thought was kind of interesting that I saw in the paper, that it seemed actually, in my opinion, that the city of Novato actually did something on the positive side, and that was it says the title was Fees Rejected for Commercial Developers. So basically, the city of Novato will likely not ask commercial developers to pay for affordable housing, at least not in the next few years. So what I took that to mean is that they realized that the developers just can't afford, because prices are so low, to pay these additional fees, but yet there's still a need for this commercial development. So it's kind of nice to see a city actually make a pro-development.
Yeah, if you want to incentivize developers,
Yeah.
you know, that's the thing. The fees have gotten way out of hand. That's absolutely sure. I just wanted to mention before the end of this segment, you know, Michelle Lerman's been our guest, and she's one of the best estate planning attorneys in the Bay Area. But your husband is Jeff Lerman, who we've had on as a guest, and he's the real estate investors attorney. And so you guys you're pretty involved in the real estate market yourselves.
Definitely, yeah, definitely.
And what's the other URL of your website that also brings you to Lerman Law? You were telling me, I thought that was pretty clever.
Yeah, it's realestateinvestorlaw.com.
Realestateinvestorlaw.com.
That's our website.
All right, guys and gals. Thoughts for the day. Watch what you mix in the washing machine. Now this happened to me. I accidentally put my San Francisco Giants orange t-shirt in, not realizing my wife's Angora sweater was in at the same time. And I didn't realize it until I put it on. I looked like Tickle Me Elmo. Not a good sight, I'll tell you. And they say money can't buy happiness. All I want is a chance to prove it. Okay, tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Our guests are going to be a couple of realtors who are going to give us advice regarding homes. It ought to be a very good show. I've known them for a long time. It actually would be kind of fun and a little bit of funny too. And in the next couple of weeks, we're going to be having another special trivia contest. So make sure that you tune in to the Best of Investing. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
Awesome.
That's